Today we're talking about KYC and AML. So usually this is our last question for all our guests, but let's start with this question for you, so not the usual. What do you think about mass adoption of KYC right now? So before we didn't have a lot of KYC verification in crypto industry. Right now we have it, and we're gonna have it more and more and more, I think. What do you think about this as a blocker point for mass adoption, or the good point? How we'll amend it? So it's open question.
I think it's a good point for mass adoption, yeah, because we at SCORECHAIN we have always believed that the new startups and new companies, crypto natives company, could develop themselves if there was a clear regulatory framework. And the same for the big players. You know, a bank will not provide a crypto asset to their customers if they can be out of the law. So it will create new offering, it will create trust, and potentially mass adoption.
I would add to that to say KYC is just one aspect of a regulatory framework. I think clearly it's good, anything more is good, but I think the issues around conduct obligations, transparency, disclosure, prudential obligations, or a broader regulatory framework is really what you're going to get institutional investors into this space. But the more you can get regulatory clarity, I think you get a broadening of the investor type and you get more licit flows of transactions, which is a good thing.
What do you think about this?
Controversial topic, actually, within Bitcoin at least. I mean, I think it's not unexpected, right? Yeah. I mean, what I think is good that more and more traditional banks are offering Bitcoin to their customers, and obviously there you have KYC. So why it's no surprise that we are going to have the same rules in Bitcoin or in crypto as we have in traditional finance. So
I think it goes to then who's doing the KYC. If it's a bank, then you've got those prudential conduct obligations, you have good standards, mature risk management. But if you're talking about a VASP or a CASP to a CASP, that's why you need a fundamentally more stuff for getting institutions interested.
What do you think, whether we are going really to the bank style KYC, I mean with political person, interest, etc., for the full due diligence process that current banks have, or we will stay at the light point, the light position? So how do you feel about this?
It's true that potentially today it's like more strict. If you are in exchange, you potentially ask more information at the bank at a lower level. No, some regulation asking to track any transaction even from starting at €1. So it's very strict today because there's a lot of bad buzz around crypto that are still in the media, and so they want to protect the consumers, but also to control all the transactions happening in the market.
So I'm an ex-regulator, so I think yes. I think I agree with what Pierre's saying, that actually the challenge is because what blockchain data does, because both our company offers the analytics, you have far more data coverage about where that asset has moved in the ecosystem. So it is different. But I come from the world that says just because you have more data doesn't mean you can just ignore it, you have to apply it. I think that's the thing. I do agree what we need to change is actually how regulators, legislators perceive this risk in crypto. And there is a risk, there's an investor protection risk, but how do you mitigate those risks? How do you educate investors when you come to trade? Those are things which are happening, like in Europe and in the UK, we'll have things like the appropriateness tests. So similar to MiFID, you'll do an assessment of appropriateness. Is this product service appropriate for you? So you're already starting to do that level of filtration, if you like.
So you're talking about these different jurisdictions, countries. So I think we're talking right now mostly about the Western world, this application of these regulations. What do you think, whether it becomes global one day, or whether it's possible? Or where is this trend to become global? Or we just will not stuck, but we'll have this restrained market where you have regulated relationships?
So I think the problem is that you've already got a fragmented global market, and unlike securities trading, this is global. So normally, say European, you trade European shares, is within a jurisdictional risk. You now have a risk profile that is global, and you're now interacting with global entities. It's a huge challenge, I think, for exchanges. we were talking earlier on today in the panel about how would you do due diligence on your counterparties. I think one of the challenges is that as people start to implement regulation, there will still be different standards fundamentally. So just because you have regulation doesn't mean it's at the right standard of doing it. It's just meeting obligations, and it is the supervision and the enforcement of those that's really going to be key as well.
Do you think that it's gonna, I would say, pass through the same funnel as it was in financial services before? Then they started these small regulations, I would say, and then go to deeper globalization of the requirements of the due diligence for the people.
Yeah, maybe also the issue with travel rule today, because the exchange of information.
I mean, we will have exactly everything that we have in traditional finance, we will also have in crypto, because the asset is slightly different. I don't think the regulator will say, okay, because of that we make different rules. No, it's no surprise that we're going to have the same things. But what do you think from a regulator perspective?
I agree with you. I mean, regulators regulate. That's their job. So they'll do it. I think the problem is that once you're in regulation, that regulation ever increases when you're looking at investor protection risks and changes. Whether or not there's going to be a standardization, I think that's a long way off, because we're still not there. I mean, you've got things like MiCA, but I think Switzerland have their own approach, UK have their own approach. There may be some kind of equivalence, but it's a challenge.
I think the interesting thing with MiCA is that so when Switzerland did the regulation, it was like it applies to Swiss WASPs, but not to a Kraken or a Coinbase or any other WASP who has a customer in Switzerland. Okay. And so they could all still do however they want, but the Swiss WASP, they had like tougher rules to follow, which was very unbeneficial for our own ecosystem. But the MiCA does it different. From my understandings, like everybody who has customers, even in the EU, has to follow the EU rules. That means pretty much everybody will have to follow. I mean, at least from the big players, everybody in theory has to follow the EU rules, and that will be very interesting. I'm sure it will be very chaotic next year.
But I think it's, sorry, Pierre, I'm not sure what to say. But I think where it becomes more complicated, I agree with you, that you have this thing that MiCA says you have to be established in the EU. The UK doesn't have that. It just says, are you carrying on business in the UK? But I think what is fundamentally changing now is financial promotion. It's solicitation. How do I grab my customer? Which is the issue around Switzerland. If you had a solicitation obligation, financial promotion rules, those customers had to make sure that the investor protection was high. They had to make the right, fair, clear, not misleading. So there's a balance of regulatory tools. It is not just about conduct and establishment, but it's also how do I access it? Do I want to create a regime that allows me access to Switzerland in a way?
Yeah, and potentially EU will be a single market. So if you are registered in one country, you can passport your license to other countries. And so it will potentially facilitate the implementation of a large player in all the 28 countries of Europe.
So you mean if you have the VASP in Spain?
The only thing is financial promotion is not harmonized. So that's the thing. So what is fair, clear, not misleading in one country may be slightly different to obligations in a different country.
And so what about, in some countries there is a jurisdiction, any governmental bodies that need to be involved in KYC process, for example. So do you think that this market will be harmonized as well? So because it's almost impossible to have the access to the same government bodies, to have the same database there, they stock the information and stock database.
That's a big question.
Yeah.
So I don't think, because different countries have a different issue on privacy and natural persons, your citizens in terms of your rights. So my wife is Norwegian, but I have a number and I have an access to a centralised KYC. I'm in the UK, we don't do that, we're never going to go down that route on the current one. So you have social differences, I think. That's my view, that would make that very challenging.
Yeah, and it's not linked directly with crypto. It's not only for crypto. This is an issue for any kind of identity. And potentially this is how we are dealing with the digital identity, which is important. Maybe to think about the European digital identity, or this would be the big challenge. Directly you can link a blockchain activity with an off-chain identity.
So you do believe that it might go up to European level, like Schengen Pact, for example, that you have.
Could be a good way. It could be a good usage of Europe, but
one of the benefits of having a state-led KYC is that then it's actually you can use it. If it's not state-led, if it's private-based, then you have to still got obligations to ensure and check it. So there are benefits of state-led. I think it's much more about privacy of data and how Big Brother is watching you. And I think the EU is already looking at some kind of harmonization of digital identity, if that goes ahead, if EU27 agree it, that will be a, partly a game changer, but it brings a lot of data protection issues. I don't know if your
I mean, considering how good government in general is with IT, I'd rather not ask them more of our data.
Lucas is always controversial, but he's true. But he is true.
And I mean, I also like the competition between them a little bit, So.
What about small transactions? Like if you want to use the crypto, then you don't need the KYC. What do you think about this? So there is a limited amount of money that you cannot be compliant for KYC or not subject to KYC. What do you think about this? Is it a good idea?
So I think there's two things. There's the KYC and then there's sort of Pierre's our business. What is the transaction risk? So I think there should be KYC, but I totally agree that there should be a de minimis threshold, because you see that now with payment firms. I go to pay my coffee, then you come to a transaction screen, you've got to investigate it, but I've got my coffee now, what do I do? If I'm buying a Ferrari, which I probably won't be able to do ever, but that's a different matter. You expect a delay. So that's where I think the challenge will come.
Yeah, and if we put a 10 euro bill on the table, there's no KYC. So why, if I pay with Lightning, 10 euro, okay, I don't need KYC for sure.
I think KYC, but a de minimis.
Yeah, but I think in today's point of view, it might be the KYC applicable to even these transactions.
Yeah, because it's not just the KYC, isn't it? It's something to do with case management. If I keep on spending $10, then it builds up. Sorry, Adam.
Yeah, I'd rather have a higher KYC limit actually. Like we used to have in Switzerland, 5,000 per day without KYC.
Okay.
And I mean, still.
Or it's still 5,000?
No, now it's 1,000 per day. They wanted to do it to 1,000 per month, which is pretty much nothing. Yeah. And now they're also treating actually crypto different than other assets, which they said they're technology neutral, but now they're not. So there's this lawsuit from one of Swiss WASP against the Swiss regulator, which is very interesting, because usually WASPs are scared to take a fight with the regulator. Yeah.
But not in this case.
Not in this case, but it's definitely a very risky move, as most banks would never do that. So it's good, we get some clarity there. Yeah.
But I think, I know we need to cut up, but I think, what jumps to mind is that, say, some jurisdictions are coming out with regulation as stablecoins as a means of payment. So if you have a means of payment and you want to use it like money, to buy your coffee, you buy something, the smaller transaction should just flow through. You've done your KYC, then you should be a de minimis. If I go into Cafe Nero to buy a coffee, just let it go through. The risk is low.
Yeah, I agree. I mean, Switzerland, I think the limit for KYC for transactions are under 1,000, so I don't see that it would be different. It's also not in buying stuff. My understanding, so that's how it should be. 5,000 per day, like it is for gold and
that's
oil.
That's an expensive coffee.
You drink a lot of
coffee. You get the Lambo for free.
Okay.
Half of the Lambo.
Okay, thank you for coming. This was Albus Talks on Dukascopy TV, and see you next episode.